Hello everyone, welcome to Smart Investing. So this video today is going to be about the banking sector, also known as the banking services sector. So today I have 5 stocks for you and we're going to go over them accordingly. So today is October 26th, Wednesday. It is 5:36 p.m. Markets are closed. Usually when I do the videos, the markets are closed. So one thing I do want to mention before we start, the last stock that we have is actually a meme stock. I have it listed as a meme stock. So we're going to jump right into that and explain why is it a meme stock. And obviously it's because it's really cheap. And we'll see if it's actually a good stock or not. So, some meme stocks may be good, may be bad. So we're going to look into this. I think this is the first time I'm running into the meme stocks. I have about 100, close to 100 saved and listed on this app. So that will be, I'm not going to make a video all on meme stock, but as we go along while I'm making these sector related videos, if I run into them, we will see if they are good stock or good selection or not. So let's begin with the first stock. First stock that we have is PEBO. So we have market cap at 817 million, 52-week high and low, 34 high, 25 low, 35 high, 25 low, close to a $10. So it's ballpark. I mean, I'm pretty neutral about it. PE is at 12. Dividend is at 1.52. Dividend yield is at 5.26. Earnings per share is at 2.41. And then we have some shares outstanding and the free float. So not a lot of shares being bought. Not a lot. Volume currently, for today, I would say, is at 196. It is above the 3-month average. And the price of the stock right now is at $28.89. So the information being presented, I don't like the 52-week high and low. The spread is pretty awful. I mean, it's sort of neutral, but if I had to lean between yes or no, I would say no. I don't really like that. PE seems fine. Dividend seems okay. I'm concerned about the earnings, if it can support the dividend. But we're going to see that through the cash flow. Now for the chart, it looks flat to me. It's not going anywhere. Obviously, for the 1 year as well, it looks pretty flat. You have a range of like $2 between that. That's pretty much nothing. Now we're going to look at the analysis for the quants. Growth is at 7.4. So that is the highest rating that they have. So is this a growth stock? Is this a 4-star rating stock? We're going to find out right now. So earnings that have been reported, they missed in Q3 2021, and it did go well in 2021 for the fourth quarter when they beat estimates. But not only that, the last 3 estimates they've beaten, and it was positive. So that is a good sign. I can't tell for earnings back then if they were having issues with negative earnings. But as for 2021, towards the end, going into 2022, it seems like they have positive earnings. Now we're going to see some annual indicators. So we have here in 2021, it is actually lower for their assets. Return on assets went up, then went down, stayed flat. Then equity went up, same thing, went down, stayed flat. Earnings went up, went down, then starting to go up. So now net margins is not giving me anything. So we have here the debt is at 88%. Cash flow has increased. Cash reserved, it's not telling me anything. So hopefully it did do better. Now for the net income, comparing to the previous years, it's close to the 2018 estimates and results. Sorry, the results. And then for 2020, they went down 35%. So overall in 2020, I would have thought they would have remained the same, since overall 2020 was a decent year. So they actually had the worst year in 2020. Now, it's not giving me revenue or any operating income. So operating cash flow for 2021, we want to see overall. If it's positive, it is positive. So we're looking at least over 200 million in cash flow. The dividend history, we're going to see if they give any raises. So they have a 2-cent raise from the last quarter of 2021 going into 2022, stayed the same. But the second payment in 2022 was a raise of 2 cents. So the cash flow does support it. Now, for this stock overall, let me look into it a little bit more. Let me see the income statement and all that real quick. So we have here 2021 numbers. So anyhow, for the balance sheet, you can see here the assets have increased. And then from 2020 increased a lot, 2020 to 2021. But then also their debt has climbed a little bit more. So, I mean, debt, it's always an issue. But they're cash flow positive. So for this stock, I'm not sure if I consider this a growth stock because it was rated the highest rating for 7. For value, I'm not really sure. I don't know if this stock is valuable because it stayed flat even for the past 5 years. So I think the only reason they consider this a growth stock, now that I'm reading the profile, is because it is affiliated with Zelle. Zelle is obviously, they are a processing payment solution website, a solution business. They process all that. So, since they're affiliated with Zelle's pretty popular. I don't use it, but it's pretty popular. So, I guess with that alone, they get some exposure. So, if I were to say yes or no, I mean, I'm on the fence about it. I'm not really sure. I don't see this as a growth stock, and the stock is okay. I mean, and they're raising dividends. So, you know what? I think I would say yes to this stock. And the only reason being is because the dividends seem stable. It has some volume. They're dealing with Zelle, so I guess I'll give it to them. Next stock up that I have is PNFP, Pinnacle Financial Partners. So first page, their volume is pretty high, comparing to other banking stocks. Market cap is at least 6 billion, a little above 6 billion. Now the price is at $80.90, 52-week high and low. That is definitely a nice range. PE ratio is at 11.4. Earnings are pretty high. So that is definitely a good sign. Dividends are pretty low. The yield is low. So I think this is one of the really good ones. And the reason I'm saying that is because they're not paying much of a dividend, which is good. And then their earnings are only getting better. This is a stock I would consider more of a growth stock. Just because of this, the range, market cap, they're not in the millions. They're in the billions. And then their earnings are pretty good comparing to other banking stocks that I've seen. Outstanding shares and the free float. So are people buying these shares? Doesn't matter who. Corporations, insiders, retail, investors, whoever. If they like it, they'll buy it. And hopefully they're holding on. So we have here, it's not really flat. It's above from its previous years from 2018, 19, and obviously from 2020. So lowest for the year that I have is around the 70s. So the actual low was 67, 67. And we have here a nice little buy at around 71. Hitting right on the line of the EMA 200. And as we can see, that nice little bounce here, and it jumped up. So the stock seems well positioned. I would definitely say yes to the watch list. If I were to rate it, I wouldn't give it a number. What I'm thinking of is, like, if I were to put this, let's say out of 100 stocks, if I were to say, would I put this in the middle of a watch list, the bottom or the top, I would rank these in the top. I can't say top half, top 10 or top 20. I don't know. Everybody's different. Everybody has their own way of, ranking certain stocks in their watch list. I'm not here to do that. Again, I'm just recommending to have it in your watch list. But it is definitely a good stock to keep an eye on just by looking at the first page. So looking at the quant ratings, highest rating, again, was growth for this one, 6.4. Overall rating was a 3 out of a 5. And as we can see here, the actual earnings and the estimates have been beaten by pretty good margins. And they just beat Q3 in 2022. And they're wanting them to report for Q4 2022. Their estimates are actually getting higher for Q4. So who knows? That might be a tougher challenge for them, but we'll see. Now, for the annual reports here, we have some decent margins. Now, for the debt, we're going to see 86% typical bank cash reserved, around the same. Cash flow slightly went up in 2021. Net income increased, which is good. Balance sheet, obviously, neck and neck with the assets to debt ratios, close to the same. So they're at 86%. Debt has gone up, but so have assets. So cash flow, we're going to see if they're positive. I'm sure they're positive because those earnings are pretty strong. So I'm guessing if they're holding on to their the net income, then that would be a nice thing to do. So investing portion for the cash flow is at 3.6. So the financing is at 3.10. So they're down basically 500 million. And look at the operating. So they're just cash flow positive. So they're about at least 150 million in cash flow. And so we just basically take that 150 million and then divide it by the shares here. We take the difference of that and then we see the amount of shares that are left over. So moving on to the dividend section here, we have 2020 results, then we have 2021, and then 2022. So it's from 16 cents all the way to 18 cents, 2-cent raise. And then to end the year as well, ended off at 18 cents. So there was no cut, remained the same, which is good. And then going into 2022, they paid 22 cents. So that was a 4-cent raise. So last split that they had was in 2004, 2-for-1. So this stock definitely add to the watch list. So I will say that again. So this stock is definitely good for a watch list. I see some growth. I don't see a full potential for growth. But again, I could be wrong. So they are supporting the dividend as well as having strong earnings. But again, I see some growth in it, very slow growth. I don't see like fast growth, going from 0 to 100 like that. I just see, some solid slow growth. That's all I can say. Next up is CTBI, Community Bank Corp, Community Trust Bank Corp. So $826 million market cap, 52-week high and low. So that is not even a $10 difference. That to me is a no-no. Market cap should be better. Hopefully it could have been better. PE ratio is slightly undervalued. Earnings are okay. Dividends are okay. So are people buying this stock? I don't care the amount of shares. I just want to see if people are buying this stock or if it's active or if they're starting to. It does not look like it, but it's starting to break to new highs. So as we can see here, that is definitely a really, really big sign. So it's not by much, but again, if this stock can hold like that and stay flat even for, let's say, 2 weeks, hopefully 2 weeks, then all it's going to take is a little bit more investment or slow investment, and then this stock can jump up another, like, $5 in a month or so. So we see the difference here from, let's say, so right here from 1020. So from 44.50, it went up to 46. Doesn't seem like much, but a little bit can go a long way. So as we can see, like on the longer term trend charts, they're breaking into new highs. So with that said, we're going to go on to the analysis for the quants. So it's not considered a growth stock. That's what it's showing me. But the highest rating was for the value at 6.3. So decent quality stock. And then for the price, it's saying that you're getting an okay value. Even though it's telling me here and the PE is it's undervalued. So with the higher rating for this, if this tells me a higher number, then that means you're getting a better deal, which is a cheaper price. I do not know that price, but 6.3 seems decent. I mean, you can only get so cheap, So for this stock, we're going to keep looking at the dividends, and then we'll look at the financials real quick. So, dividend raises, looks like they do have it for past 3 years. So 2020, 2021, from 38 cents. Look kind of flat since they were paying in 2019 38 cents, but from 38 cents to 40 cents. And then they gave a raise in 2022, which was the last payment. And for 2022, highest dividend payment so far is at 44 cents. Now, the financials, we're going to just go right through them for a little bit. They are positive, and they had a major margin from the reporting for Q1 2022. And now for Q3, it looks like they lost on that one. And then it's only getting higher for estimates for Q4. That's going to be a challenge as well if these estimates are increasing. Moving on to the annual indicators. So we have for 2021, it rose, and then assets, not by much. They didn't rise by much. Earnings have risen tremendously. So we're going from 3.35 all the way to close to a 5. That's almost 2 points in earnings. Now, margins, it's not giving me anything. Debt is at 87%. And then now we will look at some of the cash flow and jump into that. Balance sheet, again, 87%. And then total assets at 5.42. Total debt is at 4.72. Cash flow, we want to see if they're positive or negative. So 115 for operating, and 350, 216, and then 115. So we're looking at 330. So they're slightly negative, about 20 million. Negative 20 million. It would suck to use that from the net income. They have more than enough money to cover it from net income, but that's not really the way to do it. The way to do it is to have these separate entities to use income separately from their cash flow. So that way, the net income can actually grow along with the cash flow. So for this stock, they're negative cash flow. So right away, that tells me a no. And the 52-week high, I'm not liking it. So no to the watch list. And we're going to move on to stock number 4. BBD, Banco Bradesco. So we have here volume is insanely high, 48 million. I don't think I've ever seen a volume that high for a bank. 52-week high and low, it's horrible. Market cap is nice though, at 18 billion. Earnings are positive, but they look horrible. The dividend payment is only 11 cents. So what? 3 cents a quarter? That's horrible. And then yield is at 3.4. Right away, it's horrible. I don't care about the market cap, like I said. So the 5-year, it was good actually for 2018, and then it dropped like a rock. And now it's roller coasting through 2020, and it's dropped again for 2022. So the stock is pretty active. It looks like a day trading stock. This is in the millions. It's not even in the thousands. So it's in the millions. So this stock is actually definitely good for momentum trading. Day trading. For the long term, it's awful. So we're going to look at the analysis here. Quant rating, it's not even showing anything. But again, for income, I would say no. For momentum, I would say yes. For value, no. Well, for value, I would say yes. But for everything else, no. I mean, because it is a cheap price and the stock is an $18 billion company. But again, overall, this is not a stock to buy for the long term. This is more for a day trading stock. So it defeats the purpose for me to even look at the financials, since it's not a good fundamental looking stock anyway. And then for some reason, this is wrong. Well, it says the assets are in another country. So the reason I'm seeing it's $1 trillion company is because it's not in US dollars. So that is definitely the reason why. And then you can see they're 91% debt, and the debt has been growing for the past 5 years. I don't even want to look at the cash flow. So this company is actually pretty horrible. I'm not sure why they're not even out of business. They have plenty of splits. I think that's why this company is so popular with day traders. Look at that long list. Definitely a stock to day trade. And this country that have this stock is actually in Brazil. So I knew it was another country. So again, definitely no. But if you want to day trade, which we're not here for that, I do know how to do it, but I don't recommend stocks like that. I only recommend stocks for the long run. If you guys want me to talk about, technical analysis, I'll have to get more views and do all that. See if other people like it. Since I'm not getting likes or comments or shares or anything, or people sharing my information. So if my channel grows, then I'll be likely to share even more information. So it's a give and take. So anyhow, for the stock, I said no. No to the watch list. Last stock that we have, Rocket Companies, ticker symbol RKT. You can see here, definitely a crappy stock from 2021. It went from about, let's say, $25, and it just kept going down. So it went from about $28, it stood at 20, and then it just declined from there. It kept breaking new lows, and that was pretty much it. So definitely a day trader's stock in the millions. Market cap is 12.57 billion. Really cheap stock in terms of PE ratio. The 52-week high was at 18. 52-week low was around 6. So it's reaching close to its 52-week low, which I'm not fond of it. Pays no dividends. I mean, numbers are awful. This is nice for a day trading stock right here. The range, it can come and go. But with a range like that, you don't need to be greedy just to get in and out. I wouldn't say swing trading, but we'll see if they have any splits that have increased the share price. So again, the quant ratings, if we have them, we'll see what they have. If they don't, then they don't. The value for this stock, I would agree with that. It is pretty cheap compared to its 52-week high and low. Growth stock, Definitely not it. So it rated that as a 2.52. Quality, it ranked it close to a 5. But the pricing overall was the highest rating. Overall rating was a 2 out of a 5. So they rated that a 2 out of 5. So I'm going to rate it. I don't know. It is really low. But definitely I would not rate it a 3. Maybe between a 1 and a 2. So earnings are actually getting lower. So that, for me, that will actually lower the rating. Uh, Even if they beat it tremendously, that still doesn't matter to me. Just the fact that they wanted estimates lower and lower and lower than what it is. Previously, there are 4 reports. That's really not a good sign. Going into negative territory. So I would expect around Q4, they want them to report negative earnings. And that's not a good sign, actually. Right now, again, their earnings are 1.5. They're positive, but that would be a surprise earnings if Q4 wants them to report negative earnings, and then they surprise it by having positive earnings, even if they surprise it by, let's say, 10 cents. That would be a tremendous beat. So it's a hustle. It's a real challenge for this stock to outperform, and if they do, hopefully they just stay in positive territory. If Wall Street wants them to report negative earnings, that's pretty awful. So for the indicators here, I don't even think it's even worth it. This is more of a day trading stock. The debt is pretty low, actually, at 70%. But you know something I do want to see, is this really a bank? Oh, consumer lender. Because banks are usually in the 80s and 90s. They lend higher than normal. Net income has dropped from 2020 to 2021. That's definitely not a good sign. So is their revenue and operating income. So revenue has dropped, wow, 18%. I would expect that from 2021 going into 2022, like a drop in earnings or something. But from 2020 2021, definitely not a good sign. So as a consumer lender, we have here, they have 32 billion in assets, 23 billion in debt, and cash flow positive or negative. They have it at, so they are positive. But again, they're not paying dividends, which is good. But then their earnings, I'm a little worried because people want them to report negative. So for this stock, I'm gonna say no. And you can see why. I guess why people like it as a meme stock. It's good to day trade, and then people want to get rich quick. They see that the volume is pretty high. They see that it's a cheap stock and it's close to its 52-week lows. I think that's another sign of seeing a meme stock, analyzing the meme stock. So again, this is not $1 million company, because I've seen, I've gone over banks in other videos where they're not even in the billions and they have decent numbers. And then on top of that, positive cash flow. But this company has a high market cap, but, it's just all on the technicals. They don't pay a dividend. And then their shares, they have an insane amount of shares. I think that's why people also like them. So lots of shares, cheap price, high volume. Again, this falls in line, 52-week low, that falls in line with a very cheap price to confirm it. Evaluation for the long term doesn't even matter. And then basically, if I was to choose the rating for the meme stockers, so basically they just want momentum. Growth is out of the question because I would have to do with a long-term evaluation. Quality doesn't even matter. This is below a 5-star rating. Sorry, a number 5 rating. And then income doesn't even matter. And then the price, I guess, matters somewhat. But obviously they want it cheap. So, crappy quality, no income, no growth. Basically all momentum. Just like the GameStop momentum. So, there you have it. RKT. No to the watch list. And again, they want them, like I said, eventually they want them to report negative earnings. As we can see here, they want them to report negative 2 cents for the Q3. So I don't care about this stock. I guess people who love meme stocks do. So good luck to you guys. If you like this stock, have it on your own risk. So thank you guys for watching. I know the video is long, but thank you guys for watching again. And I'll see you guys in the next one.